Hello traders, welcome to the weekly outline setups volume 287. Iliya here, and as always, you know what we're gonna do. Have a look at the markets, how they developed this week, what kind of setups we had, and most importantly, try to forecast what could be happening for the incoming week. So without further ado, let's see the economic calendar and then jump into the technicals. So last week we had a pretty calm economic calendar, and then this week also feels the same. Now we have a Powell speech here today, actually on Sunday, which is going to potentially gap up the market on a Monday. So make sure to be careful on a Monday. But also Monday is a bank holiday in the US. I think Liberation Day, probably Memorial Day. All right. So pretty much Monday to me is immediately a no trading day, waiting to see how that gap potentially is going to happen. And then of course, waiting for a little bit more of a price action. And then Tuesday, consumer confidence here. We have these durable good orders. Not bad news, medium impact, but nothing too much. Then on Wednesday, we have NZD news. So if you're an NZD trader, make sure to be watching for the interest rate here. And then apart from that, we had the FOMC meeting minutes, which is usually not bringing a lot of volume because again, it's just the minutes from the previous FOMC meeting. But sometimes actually some volatility kicks in during that as well. Bank holidays here on Thursday for the euro, and then on USD we have GDP unemployment claims, and then a couple of more news, which makes Thursday again a very nice day to be trading, especially the US dollar. And then on Friday we also finish with some euro news, some Aussie, some CAT, and also PCE price index, super important, and also this consumer sentiment, which also makes Friday very nice for me personally. So again, my plan is going to be very simple. I'm going to be showing up from Tuesday onwards, okay, with my main focus being pretty much Wednesday, Thursday, and Friday. Because if Monday is a bank holiday, I will definitely not expect as much. And then usually when Monday is a bank holiday, Tuesday kind of ends up working as the usual Monday, right? And then we can start getting the moves from Wednesday all the way until Friday. So of course, let's focus and see if we can finish the month very strong. Before we get started, make sure to join my free school community. It's an absolutely incredible, positive community with a lot of value from everybody. And the classroom here is a full course that I've never shared anywhere. So make sure to join. It's the first link in the description. As always, we're going to get started with a DXY. Now, as you know from recently, I decided to try something new and to pretty much keep my forecast from the previous weekly outlook and then see how the market actually responded to all of my drawings and stuff. So I'm really going to head to the quality time frame, and you can see I kind of forecasted a more bullish DXY in this case, but I remember that I was very puzzled between DXY longs, and then because Euro USD, for example, was giving me longs, and I was like, again, not 100% sure, but we had daily bullish, we had hourly bullish here, and again, you can see, guys, right, the market literally opens. I do my analysis on the weekend, then the market opens, it gaps down, right, it creates this imbalance going lower, okay, and then since then it was just bearish, right? So it kind of makes me also feel like that I could potentially definitely produce something a little bit more midweek. I used to do that. I kind of don't do it anymore. But for example, you can see why it is so important to really flow with the market, because if you have too high expectations here, you're going to jump in the long on market open, and then you can see the whole week went bearish. So a pretty, again, wrong analysis here, but I probably told you that, but again, I didn't trade this, right? So of course, let's delete everything and see what is the current state of the market. Now, of course, we had Trump attacking the EU right now, and this is crashing the dollar. You can see we have these 4 consecutive very conservative weeks going higher, which builds a lot of this kind of corrective price action that is currently just being destroyed. And we're taking that first liquidity point here. So that is a daily swing point. And of course, below that, we're going to be having this one, which is very close. And then finally, we are going to be having the major weekly low here and even the monthly low. All right. Now, in terms of the daily time from here, you can see we also had a very nice shorting opportunity in the form of this daily bearish imbalance. The market pulled back into it on Thursday, and then Friday just dropped very nicely, attacking that very recent liquidity. And right now we are honestly pretty bearish, right? We're pretty bearish. But again, looking at where the market is closing right now in terms of the positioning of the market, well, it's taking liquidity and it's at a pretty major lower low. All right. And on the 4-hourly time frame, we really don't have anything to retest. Like, the only thing that is currently available is this 4-hourly bearish imbalance here. But I would definitely not look for that to pull back into and then to take a short from here. Absolutely not. We can be looking, for example, for a retest of this area here for a potential short, right? but we don't have any zones on the hourly time frame, which right now makes me a little bit hard to draw any forecasts because I don't have a zone to work with, all right? So I would definitely love to see some sort of a pullback and then, for example, a shift to the downside and then attack that next liquidity. That will be my overall outlook on the DXY. And that is, of course, guys, the bearish scenario, right? Because we should always be super open-minded and always have different scenarios in our heads, or just keep it even simpler without having too many scenarios. You just show up every single morning, you analyze the chart, you analyze what is in front of you, and then, of course, you act accordingly to the current price action. So that is the DXY. I do see it as more bearish. It definitely feels like this was a very nice liquidation here, manipulation, immediately pulled back into the range to choke all the long people that were long on that bullish move. And then right now we're just going lower, potentially attacking all these liquidity points. So if really the hourly time frame continues to make bearish price action and we start getting some bearish zones, I will be looking for shorts. So let's see, DXY shorts, let's see if the others are looking like longs. All right, let's check out EU. Now, again, I can see a very nice weekly bullish candle, potentially starting to target that weekly high. Are we going to get there? That is a little bit 50-50. But again, you can see here, in this case, I offered two potential scenarios because we closed here with a hourly bearish imbalance. Again, my plan here was to see really if that hourly bearish imbalance is going to hold, right? And then try to take a short opportunity from here, targeting the liquidity. But no, you can see the market immediately opened, it gapped up, boom, took the buy side. Okay, which was literally my bullish target. And then, of course, after this, you just have to flow, right? You get new zones in this case, right? These imbalances, you potentially try to position yourself into a long, pushes up, again, another pullback, probably into a daily imbalance to finish up bullish. So let's delete everything. Now, I'm going to keep this weekly imbalance still here because it looks like this is what is responsible right now for the market to be pushing higher. And then, of course, I'm going to drop to the daily time frame to look for the most recent liquidity points. Now, on the DXY, we did take a liquidity point. On EU, we have not. And we have, for example, these two liquidity points being available. Here we also did not have a daily imbalance, but this is why you should always be using the DXY, because the DXY made a daily bearish imbalance, tapped it, right? And so pretty much EU was pulling back into nothing, okay? But when the DXY has it, you can even use a zone on the DXY to trade EU. It is a little bit complicated, but I've done that a lot of times. So you can see on the daily here on EU, we don't really have anything. And let's have a look at what is currently happening. So what we did here on the EU is we created this hourly bullish imbalance. So I'm analyzing really from the right to the left. And the very last thing we also did is we collected this liquidity here. And again, where is the market right now? Well, it kind of took liquidity. It's staying a little bit at a higher high. It kind of looks like it might want to pop towards this high here. So if that was like really fresh market running, I would potentially even look to take a long into these liquidity targets, but I don't even have 1 hourly zone to work with. So again, very similar to the DXY, by the way, here, right? We don't have zones, which makes it very hard to draw expectations. For example, to say, hey, I'm looking for a pullback into that hourly zone and then a potential continuation. We really don't have anything. So the market can, for example, pull back, take some liquidity, and then if it starts offering bullish setups, I will be looking for the liquidity. The market can also just open and impulse higher above the liquidity. And then, of course, I'm going to be looking for retests and then to target the next liquidity point. Again, the DXY was bearish. I really like the bearish bias on the DXY, even in terms of the fundamentals right now. But of course, if any new developments come in between the US and the EU, that could potentially immediately shift the sentiment. Okay, so always be open-minded. But for now, I'm going to remain in my long stance on EU, but unfortunately the current positioning does not offer me any setup, so I will be looking for Monday to open, Tuesday to develop a little bit, and then hopefully from Wednesday onward we're going to be having new zones and a clearer bias, and then we can attack some of these liquidity levels. So let's see. Well, GU is definitely the stronger pair, while EU is still lingering around. This one is absolutely rocketing, right? So here again, like two scenarios, we had that bearish imbalance, but if you watched my GU analysis, I said that I'm not very convinced on the shorts on that one. I was more convinced maybe on EU shorts, but this one really looked like longs, especially sweeping that liquidity here. And then you can see it opened, right, immediately breaking the highs, hourly bullish imbalances, and then it was bullish all week, right? There is another one. Oops, not that one. There is another one here as well, right? And then the market kept carrying on to the upside. So let's see what is happening right now. The market is absolutely rocking again, taking. So if I delete this right now, we're taking this liquidity point. We have an expansion candle. So really what I really want to see this week is for us to create a new weekly bullish imbalance to then potentially trade it even next month, because we're coming pretty close to the monthly candle closure as well, right? 5 days and we're going to be closing May, right? So you can start thinking about even potential pullbacks, but honestly, we didn't do anything this month all the way until this week. So I would even say next week is viable to maybe even make another pop higher. Now again, this very massive move happened on a Friday, and then again you can see on the daily time frame we don't have any zones. So here the decision is a little bit cleaner. I would wait for Monday to close, okay, and form daily imbalance, okay. So if Monday closes, like, it doesn't matter how, it just should not invalidate the imbalance. If it creates a daily imbalance, then on Tuesday, Wednesday, Thursday, I will be looking to potentially continue longing, because if for example we don't have like a very strong bearish candle here to tell me, hey, this is a liquidity grab, right? So for example, something like this, massive bearish, then boom, massive bullish, this is a pure liquidity grab, right? If the market really stays above that level, if it creates daily imbalances above it, I will definitely be more convinced for the longs. Now dropping onto the 4-hourly time frame, we have this imbalance here. Now again, it's a little bit further away from the current price action. Yeah, massive high. Again, even taking this minor liquidity here. Definitely not looking to continue longing this one on a Monday. Okay, and Monday being a bank holiday, I will definitely wait for example, for Monday to close, to consolidate, and Tuesday to tap into the daily imbalance, right? And then from there to potentially look for the expansion. So this is of course the bullish scenario. Okay, something might happen right now. Powell might say something, Trump might say something over the weekend, or maybe Monday and Tuesday, and then the market can print a very massive bearish candle, right? And then it should be immediately into the flow, right? Starting to short, targeting all the liquidity points. It's that simple, right? All you have to master is how to flow with the markets, and this is the current situation. So let's see how it's going to develop. Now, Aussie dollar was pretty 50-50, and honestly, it ended up 50-50, right? I was here, we had a bearish one, but a sweep, and then I said, okay, let's see if we pull back into that forward bearish imbalance and then continue lower. No, it actually popped higher, but then again, you can see, okay, it popped higher. Let's look for longs, but the market then just massively rushes lower, and then back higher, and then back lower, like a very big chop right here on Aussie dollar. And honestly, if I just delete this, and if I keep these two liquidity lines here, you can see we are still pretty stuck inside that range, right? If I go to the weekly time frame, again, we're having an inside bar here, weekly bullish candle. Okay, so is this going to guide us towards that monthly imbalance? Maybe. Did we already tap that one? I think we did. Yeah, we just pinged it here by very little, reacted, and right now we could potentially start attacking then this liquidity. All right, daily time frame, again, absolute chop here, no daily imbalances, just up and down candles. Of course, that Friday candle is looking pretty good. And if we really look, for example, yeah, at the most recent price action, we have actually a zone here. So it will be very easy for me to say that we can look for something like that. This is a very easy low-hanging fruit setup. If this was, for example, a normal day, let's say Tuesday, Wednesday, Thursday, right? And the market has already done the manipulation, is already showing us the expansion, and we're getting very close to the liquidity. This is a very high probability setup, okay? But of course, analyzing it like that on a Sunday and then looking to do that the first thing on Monday, not very nice. I never trade on first thing on Monday. So let's see. Okay, the bias here is pretty clear. We're really breaking and closing strong above here the liquidity. We're getting very close to this and this high. Let's see, falling bearish bullish imbalance looks pretty good, right? It looks pretty good. So let's see, long bias on Aussie dollar, which also aligns with my overall long bias on the rest of the pairs. And here is NZUSD as well, right? Looking very bearish again, getting very close to the liquidity. I was, I believe, pretty confident about this one to potentially go short, but no, the market opens and this zone just got disregarded at all. And then we started printing bullish zones, then higher highs and higher lows all the way until the week ended. So I was wrong on that one, but again, I didn't take any losses, which is what matters at the end of the day. Currently, again, a pretty nice bullish weekly candle closing above the previous weekly high, which is pretty important, suggesting that the buyers are starting to take control. In terms of the daily time frame, no daily imbalances yet. Now, I would really love if Monday creates a daily imbalance, okay? Because if it does this, that is going to give me a lot of confidence that the market is potentially bullish and we might start attacking these highs, okay? And then, of course, on the forward time frame, very similar to AU, okay? We have this forward imbalance here. We even have, yeah, this is very small, which I'm not gonna draw. But this kind of zone can potentially hold price. Okay, it can potentially tap in, react a little bit, maybe not do much, but just hold price, oops, so that the daily imbalance can get created. And if the daily imbalance gets created on a Monday, then potentially after Monday, we can be looking for a pullback into that daily imbalance and then go long from there. Okay, so very similar to AU. Does AU have such a daily imbalance potential? It definitely does have it, right? So let's see if on those two pairs we're going to get that daily bullish imbalance. And if you do get this, this is definitely going to introduce a lot more confidence that the market could potentially go higher. So tap into the hourly, maybe give a little bit of a reaction, consolidate, and tap into the daily, and then potentially start rocketing. Now this daily again, guys, hasn't formed, so I'm just making, I'm forecasting way too much here, but this is kind of the overall plan. If I see this happening, I will definitely get excited about it. So let's see how it's going to develop. All right, gold is next on the list. So here again, I was very 50-50. We were tapping into weekly. We had daily bearish. We had hourly bearish here. So when it was all over the place, we just have to give it a little bit more time. And again, you can see Monday open, didn't do much. But then on Tuesday, things started to get clear that we're starting to go higher. And then pretty much the week ended up bullish, attacking pretty much. We took out that daily one and then we headed for the next daily. Okay, so if I delete everything, all right, and then just head for the weekly time frame, we can see that this weekly imbalance really responded actually, right? We consolidated for quite a couple of weeks. We tapped in here and then this week opened and it just popped higher. So again, right now, when uncertainty starts to kick back in, so for example, Trump again starting to press on other different tariffs and this and that, right? We can immediately see gold immediately starting to react. Beautiful daily imbalance here, taps in, boom, attacks the next liquidity target, which in this case was this daily bearish imbalance. And if I actually draw this one, because this is relevant, right? What can we expect next? Well, looking at how it's currently developing again, definitely looks like the buyers are right now in control. Now we don't have a new daily zone here to trade from, so we have to rely on the 4-hourly time frame. And the 4-hourly time frame is also not amazing. Like we have this 4-hourly zone here. At least we have 4-hourly zones, because again, this gives me more confidence for the longs. Now again, guys, keep in mind, gold is like the US indices. It is very sentiment driven, but it still works amazing with higher time frames. While indices, they don't work amazing with like daily zones and 4-hourly zones, because they just keep to they just tend to break them very nicely. While for example, gold here, if you wait for that sentiment shift and you look at 4-hourly zones holding, then you see the daily zones tap and hold, it's great. Okay, so currently I would say I'm definitely long biased. Like all the USD pairs are giving me long bias right now. Of course, DXY short and the rest long the majors, right? In this case, again, I would say, well, let's wait for some sort of a pullback into a 4-hourly zone and then, for example, go long from here. Or if the market like decides to impulse from here, we can of course continue going long until the next liquidity points. You can take them one by one. There is the first one, there is the final one. No, it's not the final one. There is another intermediate kind of high, and then we have the major high. All right, so that's gold looking pretty bullish. Again, currently we have like only these two 4-hourly zones, so either pull back into them and then look for the longs, or wait for new zones to be created, and then of course work with fresh price action. But overall, again, long bias, absolutely nothing to tell me about shorts. Of course, the market can gap up on a Monday and make something bearish like this and make a 4-hourly bearish imbalance, and then immediately we can start attacking the liquidity. Okay, so I might as well keep this scenario, because in the nowadays markets, right, you should not expect anything. You should just show up every day, look at what the market is doing, and then flow accordingly. So that's gold, but I would say I'm definitely more bullish. All right, let's see what the JPYs did. Now on USD JPY, I wasn't so sure of the bias. Like we had that daily bullish reaction area, and then we also had that daily bearish above us. So I was kind of through a little bit of a forecast here, but it was not a good read, right? So you can see the market immediately came into the reaction area, consolidated the whole Monday, and then Tuesday started then giving us the bearish signals, and then we ended up the week very nicely bearish. So again, let's remind ourselves that we are coming from that weekly zone, which is a zone that I didn't really think it's going to create such a massive reaction, honestly. But then again, that weekly candle anatomy here, this last candle, right, really suggested a lot of sellers coming in, and then this week is opening, and then boom, we're really crashing down. So let's see, are we going to start attacking all of these major lows? Let's see. Now, this is when a market kind of starts getting interesting, when you really get introduced the bias, all right? And then, of course, your task is to start, of course, attacking all the liquidity points and finding a good price and a good setup to do that. Now, On the daily time frame here, you can see it was kind of a little bit sluggish, but it still went down, so it's not creating daily imbalances. And when it usually does this, again, your best friend is going to be the quality time frame. And we kind of had a quality zone here. It got tapped right there, and then we had a little bit of a bullishness, but then immediately shifted bearish. Then on a late Friday here, probably don't want to trade. So honestly, again, I don't trade UJ, but not sure how many opportunities we could have gotten on this one. Like, for example, gold longs was very nice. I know GU longs was nice, but this one on the short side, apart from that short here on a Thursday that happened at midnight, I don't really see anything else. And maybe a short right there, right, from this very small zone here, right? But currently, what are we having? We are ending up the week with this very nice quality bearish imbalance, which is just sitting before the liquidity is taken. So I do see two potential scenarios here. Yeah, it's going to be very hard here to make a daily bearish imbalance because it's very close to the invalidation line. Okay, but if it makes a daily bearish imbalance, that will be amazing. But we can do a couple of things, right? We can pop down, take the liquidity, and then start pulling back. And then from there, we can see if the market is going to go lower. Or, of course, my preferred scenario will be for us to pull back into the quality time frame, right? And then, of course, start going lower and attacking the liquidity. That will be the perfect one. So again, let's see which one is going to happen. I would say I'm definitely more to the short side because, again, kind of the bias for this week has been good on all the pairs. We're having the DXY showing us very nice bearish signs when we have the rest of the majors giving us the long signals, and also we can see within USD JPY, it's also looking pretty clear. But again, let's see how it's going to play out. This is kind of the zone that is really going to be very important going into Monday and Tuesday. And then, of course, anything on the daily that forms is going to be important. So let's see, right? We're also kind of aligning with this zone. This is kind of the overall order block, the overall buy before the sellout. This is also a very strong resistance level. So let's see, short bias on USD JPY, we just have to really wait to see how it's going to play out because, as you know, it's pretty hard to do that on the weekend. Now, looking at Euro JPY, in terms of kind of the overall bias, definitely not bad, right? This was kind of my target, so the market eventually went there, but you can see we came in on Monday here very strong, we reacted, came in again, reacted, and then came again a couple of times, then we even threw a very massive wick here to take the stop losses, and only then it flushed, right? So even this is why I don't trade these JPY pairs, because they kind of tend to do this. Sometimes they're very nice, but a lot of times they're going to be choppy like this, right? And at the end of the day, like you tried to short here, you tried to short here, you tried to short here, it stopped you out, and then eventually it went to your target without really giving you a clear entry, and maybe you got a stop loss, right? Now, in terms of the weekly time frame, this is absolutely not a pair that I will touch. Like, just look at all that. I'm getting a headache just looking at this chart. And then, yeah, on the daily time frame, we did respond from that daily imbalance, which is pretty good. And we also took out that liquidity, which is pretty good. But look at the rejection here on Friday, right? Not showing us a lot of strength, closing below that liquidity point. No daily imbalances. Then if I go to the quality time frame, we have this quality imbalance, but again, you also have to study the different types of imbalances, right? Because not all of them work, okay? Now, when the imbalance is created like this coming from a sweep, right? So a very massive rejection here, and then the candle 3 is also pretty bullish, all right? It's not the best, honestly. It's not the best. Now, can it work? Definitely, all right? So this is going to be, for example, the first scenario, the textbook scenario, but I really don't have confidence in this, especially coming into Monday. Okay, so let's wait for Monday to pass. Let us see what the market wants to do. Like, let us see if it actually wants to hold. And then, of course, if you know how to trade, because every single time frame is the same. If you start seeing that quality hold, then you can drop to your 1 hourly, you can drop to your 15-minute time frame, and you can then still chase the market towards the liquidity. Okay, because trading is really easy when you know when you know where the market is going. Okay, and then all you have to do is just find the trade with a good risk to reward. Okay, trading is not really about guessing, like, and saying, hey, it's gonna go from here, it's gonna go from there. No, trading is about waiting to see where the market is actually going to go. All right, and being pretty convinced about it, and then your task is to find an entry. All right, so that is the Euro Yen. Again, I would say I'm definitely more on the bearish side. I'm just not loving here the formation with which it closed. So it can do multiple things, like it can even come to sweep the liquidity. Like if that quality zone fails, let's say, it can definitely come and take the liquidity as well. And then after this, what is going to happen? I don't know, because that's going to be like Wednesday, probably Tuesday, Wednesday. So I am not why is it called an oracle to say what's gonna happen? All right, so that is euro yen, a little bit more bearish, but let's see how it's gonna go. Well, GJ kind of similar to EJ, right? Sure, it went where I wanted it to go, but it went there in a very choppy way, right? This is probably not enjoyable to trade. So if we check out the weekly time frame, again, I'm just gonna delete everything. Swept the liquidity again. This is again a bad signal, right? So if you try to go long after such a sweep, definitely bad decision. But here we already had the bearishness being introduced here, right, in the form of that daily imbalance. We tapped it on a Monday, and then we ended up going down, tapping into this daily reaction area right now. But you can see there is no bearishness here. Like the daily is not impulsing. Actually, here you can see 2 days. The market very nicely holding from that daily imbalance. Now, of course, the last day here is an inside bar of the previous day, which again suggests consolidation and lack of clarity. And here, if we drop to the hourly, I'm again getting a headache here with all that chop. But we had that bullish one here, and it kind of tried, and then it failed. But then it also did not take the liquidity below, and then currently doesn't have anything bearish, but it also doesn't have anything bullish, and it's stuck in an inside bar pretty much, right? So there are your 2 liquidity points here, okay? And I would immediately say, let's wait, okay? No bias here, and you can see, for example, GJ is starting to give you long signals while EJ is giving you short signals. This is usually not good when they're not correlated like this, because one or the other is going to take over, okay? So is it going to be the bullishness of GJ that is going to cause EJ to go up, or is it going to be the bearishness of EJ that is going to cause GJ to go down, okay? Let's see, but personally, I would prefer EJ a little bit more right now if I was even trading these things, because here we don't have any zones. It's pretty chopped up, and I don't like it. So that's GJ. Really no opinion. We gotta wait here. All right, welcome to the futures part. We're gonna start with the S&P. Now I do have a profitable week, but I only traded on a Monday, so I had a profitable Monday, and then that's that because I was traveling for my mother's birthday, so I wasn't really trading this week overall. Now let's see what is happening. Let me first have a look at that overall forecast that I do. Again, we pulled back into that volatile zone. We very nicely responded, and then from then we ended up dropping. Why? Well, because of the recent development with Trump again, starting to throw a little bit more uncertainty right now again. However, we have a gap here, okay? So we're currently tapping into that daily, but really what I want to center my attention to is this gap right there. And I think this is going to be a pretty good buying opportunity. So I'm even going to set an alert from now on, right? So I don't forget, okay? Like that. Because when this gap is filled, then probably this could start causing a little bit more of a bullish reaction, because currently, again, we have been in a bullish market. And what is this? That's a dip, right? From the high to the low, that is a 4% drop. Now, can it pop a little bit lower? It definitely could, okay? We're having a daily bearish imbalance here on the ES that kind of suggests a lot of bearishness, but also at the same time, I drew this daily, but we also have a very shitty weekly bullish imbalance, right? I think it's legit because it's with the gap and stuff, but there is a very strong level of support here within that area from like 57, let's say, all the way down. Yeah, pretty much 57.60 to 57. Like this area here is pretty strong. So again, like if I drop to the hourly time frame, we had a pretty we had that end of week buy off to create the weekly candle low. And do we have a forward imbalance here? Very small forward imbalance. Again, you can see these forward imbalances do not work amazing because when you had like a large candle that rejected and the next candle immediately pulls back into the imbalance, not amazing. All right, not amazing, but let us see. Okay, so here in terms of probably all the indices, it's gonna be really a matter of waiting to see how the market is gonna play out and whether the dip is over, all right, or whether it has a little bit more space lower. Now, if the market breaks below this low, I would be buying stocks. Well, I would be buying the S&P ETF, right? Because any individual stocks right now, I think I bought a lot of them. So I really want to stack up a little bit more on the S&P right now as it's going up, right, towards all-time highs. So I think this is going to be an amazing buying opportunity down there. Now, if the market opens and starts invalidating that volatile bearish imbalance, if it starts really giving us a very nice uptrend, all right, then of course you can still buy a little bit more, but then I'm going to be focusing on trading it to the upside, okay? So overall, my profitable day on Monday was pretty nice because we had this very nice impulse higher for the longs, and then I'm kind of happy that I didn't trade anymore because looking at this price action, I'm probably gonna I would have probably had a losing week maybe, or a break-even week and all that chop. But again, let us see, okay? I would definitely say, like, in terms of what I would like to happen is I would like to have one more leg lower towards that weekly and daily zone to fill in the gap, right? You can see the gap here, right? It's even cleaner on the daily. Fill that gap, okay? And then from there, right, start to go higher, okay? So that is going to be my ES. Again, I don't swing trade these things. I position trade them, I invest in them, and I also scalp them, right? I work with the futures and the overall US indices in the two extremes, right? I'm investing, which is kind of the longest form of speculation, if you can. Yeah, it is a speculation. Investing, is it? Yeah, it is. You still have money on the risk, right? And I also scalp them, which is definitely the other extreme of the speculation side. So let's see. All right, let's have a look at the others to see if they're also giving us some bearish signals to support that drop on ES. Let's check out NASDAQ, which is a lot of your favorite asset to trade. Personally, I like ES a little bit more. Now again here, a lot of moving parts. Weekly bearish here, the market reacting from it. We had daily bullish reactionary that the market tapped into it. But right now, I will delete all these things and keep it to what is a little bit more relevant. That is this weekly bullish imbalance, right? What is this? Oh yeah, this is kind of the retest area. So this kind of sell to buy is probably what I have marked up. Yeah. So overall, again, you can see the market made all that price action, broke above it, and right now we could potentially pull back into this very zone. So I'm gonna just drop a line right there to keep things cleaner. I would drop a line like this. So really, to me, this is a very nice zone, and it also suggests that, for example, here we also have that gap. But if ES fills the gap, I don't think NASDAQ can come to fill it all the way. I think one of them to fill it is going to be enough. And now again, an overall kind of a choppy start of the week, and then we ended up going lower. We also closed the week here with a very small hourly bearish imbalance. So really, let's see how it's going to open. It's pretty hard to say from now on. Again, I would love some more shorts, okay? This forward imbalance is already working, so hopefully we get some negative news during the weekend, and then the market gaps down, it starts going down, taps into these areas, and then from there, if you start getting the longs, all of that liquidity here is going to be very nicely corrected, probably with a very sharp push. And usually this is going to be a result of some catalyst, maybe some Trump against this, something positive, and then the market is going to start rocketing. So let's see, this is my overall plan. That looks a little bit more like an intra-week plan, right? Start bearish, tap into the weekly, and then from there start buying it towards the liquidity. Is it going to happen? We don't know, of course, but as I scalp the futures as well, I can trade it short on the way down, and then as soon as I start seeing the bullishness, I can trade it up on the way up. But I'm also going to be buying long term if ES and NASDAQ pull back into that weekly imbalance right here. So let's see. Well, US 30 always being the black sheep, it kind of looks the weakest right now. It's tapping into that monthly imbalance and it's rejecting from it. Here we don't have a weekly imbalance that formed, and actually here we even have a daily bearish. That is very bearish signal, and you can see this one is already filling so it already filled the gap, right? This makes me think, is ES right now also going to fill it? It definitely could be. So you can see this is why I don't trade YM, because it's always different. It's always stranger, right? Now here on YM, we do have this weekly below us. Now, is it going to pull back all the way down there? Definitely could be. I don't think so. But with this daily bearish imbalance that is created, that is kind of giving me even some more confidence to continue the shorts. But now here again, you can see on the hourly time frame, we don't have a hourly bearish imbalance while the rest had it. And we filled the gap here. All right, we filled the gap, and this is why the market responded very nicely from here, because we filled it. And it also again makes me question. So I definitely don't think NASDAQ is going to come all the way down there, but ES is very close. Well, it's not very close, but it's relatively close, right? So it's just like 80 points was 1.40%. And this is going to result in an overall 5%-ish, 4.3% drop. I definitely think ES can do that. But again, knowing that YM already filled that gap, I would probably buy even a little bit of stock on the weekly open. So tomorrow on Monday, right? Because imagine that the market right now responds from that US 30 gap, and then it starts printing higher price action, and then of course you miss the opportunity. So I don't trade this index, but it looks the same to the others, right? Massive push, pullback, no volatile imbalance. So again, where is it gonna go from here? We really have to see, and I will definitely have to monitor a little bit more of YM in order to determine how can that also influence ES and Nasdaq, because they kind of tend to move together. And a lot of times, if YM is doing something different, all right, ES tends to chop up, while Nasdaq kind of tends to be a little bit more on its own. Okay, which is why Nasdaq is actually a great instrument. I don't trade it yet. Maybe I will do in the future, but it's a little bit more independent because it's just, again, tech companies, while YM is kind of a combination. And if YM goes up and Nasdaq goes down, then ES is gonna chop, which is when I'm gonna be taking some stop losses, for example, right? So let's see. Not much of a technical forecast here. We really have to wait to see which side is going to take. So let's wait for that and see. Well, DAX also finally throwing us a little bit of a dip. Now again, I had a long bias here, taking the liquidity. That happened on Monday, and then since then we chopped around, and then on Friday, just boom, massively crashed towards the weekly imbalance, which is great. So we pulled back into the weekly imbalance after taking all-time highs again, and right now on the daily time frame, it's a pretty expansive candle. So you really have to, again, show up here and see what is going to happen. Because if it forms a daily bearish imbalance here on a Monday, then you have to wait for that daily bearish imbalance to fail. On the volatile time frame, we also have that very sharp flush here, creating that volatile bearish imbalance. So again, is it going to tap, is it going to follow through and then create the shift, or is it going to break with a volatile imbalance and then start going higher? We have to see. I think, again, with the current uncertainty right now within Europe, DAX could potentially even fall a little bit more. So I would say shorts are definitely viable, but all right, that could also be the dip, right? An almost 4% dip for the market to right now resume the uptrend. Okay, so again, this volatile zone is going to be very key. And also, if you're trading DAX, make sure to monitor for that daily imbalance that can get created, and make sure to ensure, if you want to go long, wait for that daily imbalance to fail. For now, I'm pretty 50-50 on this one, so let's see how it's going to develop. All right, so to recap, overall, it's pretty clear this week what we're expecting. The DXY looks pretty nicely bearish, about to attack all of these liquidity points. Now, we don't have a zone to work with, but of course, we have to wait for one to form. And also, usually, a lot of these pairs here are contradicting with the DXY, but this week, they're all aligned, right? DXY bearish, EURUSD going up very nicely, but again, here, we're also going to need a little bit of a zone, or to see a little bit more development to see how we're going to go long. GU also super bullish, looking for a daily bullish imbalance to form on a Monday, and then looking to tackle it on Tuesday onward. Aussie dollar and NZD dollar also looking pretty bullish, with that hourly bullish imbalance created here at the end of the week. So that can potentially give us some more longs, or we wait for Monday to pass to form a daily imbalance, and then from there we can be looking to long. And also gold, right? Gold is starting to reverse from that weekly zone, potentially attacking the liquidity points. Again, here we're going to be needing a pullback into some sort of a zone. In this case, we have some volatile zones, so let's see if it's going to give us the longs. And then USD JPY is giving us shorts, definitely, of course, very similar to the DXY. Volatile zone here, potential pullback, and for us to go lower. In the meantime, EJ and GJ a little bit flat, right? We're getting a little bit of a short setup here on Euro JPY, but I really don't like how it swept that liquidity, and then it rejected very violently from it. So I wouldn't really rely on that volatile zone a lot, right? And then GJ, you can see, is actually making here a higher low formation, right? Giving us a little bit more of a bullish signal. And also, it does not have a volatile bearish imbalance. But again, in this case, when GU is super strong and UJ is super weak, GJ is going to consolidate. So again, these two JPY pairs, really not a good idea to be trading them. Now, when it comes to the indices, again, I overall outlined that I would personally, I would like to see one more drop lower towards the newly created weekly imbalances on ES, and potentially to look for a potential gap fill here on ES. Nasdaq is pretty far away from it, so I wouldn't expect Nasdaq to drop that low, but here the weekly imbalance at 20.7K is going to be very interesting. While YM is already pretty kind of bearish, already filling up the gap, not having a weekly imbalance that is created this week, so it kind of looks pretty weak, all right? So a little bit 50-50 on the indices, honestly. Well, we really have to be watching out the news and the sentiments and seeing what Trump is going to say. But currently, I believe we are in a dip, all right, because the market has been going long for quite some time. And of course, there is going to be 1 week that is going bearish, and we just had a bearish week here. So of course, next week could potentially start expanding, but we're going to be monitoring the news for that. And I'm going to be buying a bit more stocks. And DAX as well, the first pullback into a weekly imbalance. Right now, we have to watch the daily and the volatile time frame to see the shift to bullish, right? And then of course, we can start longing it again. So let me know, traders, what is your favorite setup going into the incoming week? How did you also perform this week? How is your month looking so far? Let me know in the comments. And of course, I'm going to talk to you on the next outlook.